Hi there, guys, and welcome to today's episode of the Cryptoverse, which is your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. My name is Chris Coney. I am the host of the Cryptoverse and the founder of cryptoversity.com, which is the online school where you set the price to learn about Bitcoin, cryptocurrencies, and blockchains. You can find out more at cryptoversity.com. You can also go to cryptoversity.com podcast page to subscribe on iTunes, Stitcher, Google Play, YouTube, and now Steemit. You can also support the Cryptoverse financially by going to Steemit and then upvoting this post on Steemit. Alternatively, if you'd like to make a direct contribution in Bitcoin, you can do so on that page as well. So let's go to the markets today. Let's see what we've got. Bitcoin's down another 3.2%. Oh my goodness. That's going to look really bad on the charts, I imagine. I haven't looked at it yet, but wow. Another big wow. Oh my goodness, there's red all over the place today. Oh, so much to say. The overall market cap of the Cryptoverse, which is one of my favorite numbers, it's down significantly. Literally a week ago, we were at 13 billion. It's now 11.7, which means a lot of money has left the Cryptoverse. And let's see how that's happened. Well, today we have Bitcoin having been traded $186 million worth of trading volume in the last 24 hours, leaving Bitcoin down 3.2%. That puts a Bitcoin, according to CoinMarketCap, at $603.13 and makes Bitcoin as a whole worth $9.5 billion. Following that, in second position by market cap is the Ethereum Core token. That blockchain's now worth $859 billion. In the last 24 hours, that's traded $43 million and shaved 9.2%. That's another dip for Ethereum Core, and here's the reason why. In third position, in terms of overall market cap, is Ethereum Classic. It's now rocketed its way into third position as the third most capitalized coin, which is an absolute mind blower. And that's because Ethereum Core has gained 23.75% of its value and $90.5 million worth of trading volume just in the last 24 hours. That puts an Ethereum Classic token at $2.63 and makes the whole overall Ethereum Classic blockchain worth $216 billion. Million. $216 million. And that's more than Ripple, Steem, Litecoin, Dash, Nemcoin, MadeSafe, and the NXT coin, which are all in the top 10. I believe yesterday Ethereum Classic was down in 7th position. Now, what does this all mean though? It means that there is still support for Ethereum Classic and significantly increasing support by the looks of this. You can't say directly that that 9.2% loss in the value of Ethereum Core. You could speculate that money has gone into Ethereum Classic, but you can't be sure of that. Granted, Ethereum Classic has gone up 23% and Ethereum Core is down 9%, but people could have sold that Ethereum for any other currency, so without some analysis, you couldn't really say that with any certainty. Unfortunately, Steem is down 13% today, near enough, putting a Steem token at $2.02. That must be some people cashing out. Oh, everything's down today. Litecoin's down, NEM's down 10%, Lisk is down 11%. Anybody else want to hurt me today? Nope. Wave's down 7%. Quite a lot. See, that's where all of that market cap has been lost. Wow, very interesting times. If people sell a crypto, generally they'll sell it for a US dollar, which means if money leaves the Cryptoverse, it means they want to acquire dollars instead of crypto, which I would never do that, but each to their own. Looking at the Bitcoin price chart, oh my goodness, yes, we definitely look like we're entering a downtrend phase here in Bitcoin because there was 2 days ago, big red candle, yesterday, big red candle, today, red candle so far. So that's very interesting. I said yesterday that my faster moving average, which is the blue line on my chart, was starting to turn, and it's continuing to turn now that more data is coming in. So yesterday, according to the Bitstamp chart, it was 3% near enough loss on that day. Very interesting. What is the explanation for this, I wonder? I don't know off the top of my head, and today's article is not going to answer it either, but we'll find out in due course, no doubt. And I say that purely from a curiosity point of view. I'm not going to make any investing decisions or trading decisions based on, very short-term price information like a day or two or even a week's worth of volatility. It doesn't make any difference to me. I believe in the fundamentals of crypto, and that's what I'm investing in. So I'm not really too bothered about a big swing up or a big swing down. I'll just keep hold of my crypto and keep buying it, as I always do, over time. All right, today's article then. Today's news courtesy of CoinDesk. We have an article that's entitled Bitcoin Browser Brave Raises $4.5 million to Fight Online Ads. And the author of this article, again, is Michael Del Castillo, I beg your pardon. And his Twitter handle is @DelRayman, DelRayman. This was published on August the 1st, 2016 at, what was that? It was yesterday, at about 3 o'clock in the afternoon, British time. So let's see what this article's got to say for itself. The maker of ad-blocking browser Brave has raised $4.5 million to expand its effort to let users voluntarily send Bitcoin micropayments to their favorite websites in exchange for an ad-free experience. When Brave Software first unveiled a version of the browser earlier this year, members of the media signed what has been called a cease and desist letter addressed to Brave. Signed by some of the biggest publishers in the world, the letter described what they perceived as the browser's blatantly illegal blocking of their ad revenue. Since then, the company's founder has been engaging with those media outlets on a one-on-one basis in an effort to explain that Brave isn't meant to just prevent internet users from having their data mined, but to give media organizations a way to recover revenue from those who are already blocking ads. That's a very interesting way of putting it, isn't it? So Brave's coming at it like, yes, we block ads, but we don't just block ads and that's it. Like traditional ad blocking software does that, right? It just blocks the ads and that's the end of it. Whereas Brave is saying that, we'll give users the option to run the ads, and then they can either earn some advertising revenue from that, or they can have that donated to a charity or a third party of their choosing, right? So it's kind of like how search trade works. The money comes from advertising. So an advertiser runs an ad on a newspaper's website, say, and ordinarily all of that money would go to the newspaper, right? And the user, the one who's viewing the article and viewing the ad essentially, that's why the advertiser wants to advertise, because they want to show their ad, product or whatever to the person reading the article. So some people are like, no, we don't want to do that. So they just run ad blocking software. And then they read the newspaper article for free and they don't actually don't see any ads. So the advertiser doesn't get value, the media company doesn't get value, and the user gets all the value, and that's not fair. So what Brave's going to do is they're going to sit in the middle as a web browser, and then you can choose whether to turn off all ads or whether you would like to be paid a piece of Bitcoin every time you view an ad. So that advertiser would pay the user to view the ad, if that makes any sense. And then some of it would go to the publisher to pay for the article, and everybody wins. And of course, you can change that from full block, complete block of ads, don't want any money, to, yeah, I'll take the money, but I'll donate it, all the way to, well, I'll have the money for myself, thank you very much. You can download the Brave browser now, actually, because I'm testing it myself. So it doesn't have the micropayment system set up yet, but it is still useful if you want a browser that blocks ads and trackers. Moving on with the article. In conversation with CoinDesk, Brave Software's founder and CEO, Brendan Eich, his name's E-I-C-H, Eich, said he intends to use the money to double the company's employees from 10 to 20 and continue to help bridge the gap between content creators and users. Wow, so they've got $4.5 million and he's going to spend it on more team members, he's saying. So Eich said, quote, "We want win-win for users and publishers. We put users first, but we want publishers to earn a better share than what they received with traditional ad blocking." Close quote. Participating in the round, i.e. the companies that are participating in this funding round, are Founders Fund, FF Angel, Propel Venture Partners, Pantera Capital, Foundation Capital, and Digital Currency Group. With a total of $7 million now invested, the San Francisco-based firm plans to invest the money in adding new features to the platform and hiring additional staff with a special focus on quality assurance as part of its growth strategy. The value proposition. Dan Moorhead, CEO of Pantera Capital, which invested $1 million in this most recent round, told CoinDesk it's exactly this ability to navigate the space between content creators and consumers that first resonated with his firm. Moorhead points to a history of seemingly dominant browsers, including Netscape and Internet Explorer, being disrupted by innovative new services as evidence of the place he sees Brave filling in the market today. In Brave's case, that innovation is a business model that empowers users by protecting their identity and gives media companies a way to generate the revenue. Right now you have, this is a quote, right now you have the two extremes, the annoying ad and subscription models and the annoying ad blocking, said Moorhead. Adding, quote, Brave is the middle ground between the crazy ad system we currently have and where all ads are blocked and no content is produced. This is a very close quote. That's a very good point. So the thing users don't get about wanting stuff for free is that how the hell are we going to pay to produce it, right? How the hell do I pay for my microphones, my electricity, and my podcast hosting and all that stuff if I don't generate any revenue, right? Then unless I'm completely altruistic and I then, make money in another way and then just spend it on the cryptoverse, that doesn't make any sense, right? Any reasonable businessman everything should self-sustain itself in some way. Now the cryptoverse isn't hugely expensive to run in terms of technology and direct expenses, but it's extremely expensive in terms of time. What you don't appreciate is that when I record these, it may only be a 20-minute recording, but the amount of work there is to produce it after that, the post-production and all that sort of stuff, and the distribution of it, that takes maybe 3 or 4 times longer than it does for me to actually record the thing. Anyway, the point I'm making though is that everything should be self-sustaining. So if there was no way for me to at least monetize the cryptoverse, like through Steemit, for example, then that's one way content creators can get compensated. So if you go onto a blog and then you block all the ads, well, I don't think that's fair, because you're getting the author has written the article, you're getting to read it, so you're getting the value as the user, but what are you giving in return, right? Now, viewing an ad is valuable, right? So I suppose that's where the balance is. I mean, right now, as I look at this CoinDesk article, there's a Google ad down the right-hand side. It's a banner ad. So in exchange for reading this article, my browser is viewing this web page, and that's triggered a payment from this particular advertiser to CoinDesk, right? And that's fine. I'm reading the article, they're getting paid for it. But I guess users aren't happy with that. That's not enough for them, I guess. I guess they want not just the article, but they also want a piece of the advertising revenue, which is fair enough, it's innovative. Anyway, going on, the next heading reads, Bitcoin, Bitcoin, Bitcoin. Brave is currently partnering with wallet providers BitGo and Coinbase to provide Bitcoin wallets and purchasing tools, and each says he hopes to partner in the future with wallet provider blockchain.info. But, he added, that while support for these diverse wallets is a high priority, Brave has no plans to add support for Ethereum or its new cryptocurrency cousin, Ethereum Classic. Quote, we're just sticking with Bitcoin because we need something frictionless under the hood, he said. And he also concluded, we're still excited about using Bitcoin. Going forward, each says one of the company's top priorities will be to design identity protection services that do a better job of preventing identifiable information from leaking through where marketers can access it. Brave is currently available for download on iOS and Android mobile devices and several desktop platforms. The version currently available is a developer version with a 1.0 release scheduled for September 2016. And that's the end of the article. Disclaimer, CoinDesk is a subsidiary of Digital Currency Group, which has an ownership stake in Brave. So yes, that's a good thing for them to do, because if they publish a favorable article about Brave, then you might think it's independent when in fact it's not. Right? It might not entirely be objective, considering that the author on CoinDesk, that CoinDesk is also owned by Digital Currency Group, who also invested in Brave. So CoinDesk and Brave are kind of cousins in that way, because they have the same investor company. So it's very good that they have that transparency. And let's see if anyone's commented on it. 4 comments so far. So someone's basically re-quoted part of the article that says this cease and desist letter, was signed by some of the biggest publishers in the world. The letter described what they perceived as the browser's blatant, illegal blocking of their ad revenue. And then the comment goes on to say, I am so tired of these ads everywhere. It should be illegal to advertise like this. Well, yeah, okay, fine. I take the point. The question is, though, to that gentleman, Tom, a genuine question. I'm not being sarcastic at all. I'd like an open debate. How would he propose that the content get paid for? Because unless we're willing to do what I think it's the Times in the UK, they have a subscription model. It's like £12 a month, I think, or £12 a year, I think it is. You pay £12 a year, it's £1 a month, and then you just straight up, that's it. You're just like buying a newspaper. You pay them directly for the content, you get a login, you unlock the article, right? And then if you're not a member, you can read like the first paragraph, and that's it. And then to unlock the rest of it. I think the Financial Times does something similar. So that's one model, but the problem with that is that not enough people do it. That's the freemium model. And like a lot of freemium businesses, there's the percentage of people who actually upgrade to the paid version versus the free version is absolutely unbelievable. It's between 1% and 5%, and 5% will be brilliant, but it's usually 1% or less of the people using a free service that actually opt for the premium features. So that's like unbelievable. So you're providing value to like 100,000 people, and only 1,000 of them bother to pay for it. It's crazy. So I'm genuinely interested in people who object. I don't mind people objecting to ads and ways of monetizing, but I would just genuinely ask, what would their solution be? Because when you ask the question, someone might come up with the actual answer, like a world-changing answer that no one's ever thought of before. So someone's actually replied to that comment saying the key is not related to the description. There is nothing illegal about blocking ads. They are not blocking the revenue of any company. If it was possible to call anything blatantly illegal regarding revenue, there would never be more than one source of donuts on the planet. That's a good point. So yes, so absolutely, it's not like taking them out of business. If they ad revenues decline, then they could opt for a different business model, couldn't they? I mean, for example, I'm looking at this Google advert on the right. I know it's a Google ad because it's got a little triangle in the top right corner, which says ad choices, which is the Google network. So it's a banner ad. Now, it's by a company called Pavlok, which is a company I bought a product from, which is why that banner's following me. And if you want to see a review of the Pavlok, it's on my personal Chris Coney YouTube channel. Anyway, it's a device that helps you break bad habits. I'm not going to go into it. Anyway, what I can, if I were Pavlok and I were the marketing manager for Pavlok over here, what I could do is I could specify specific websites I did not want my advert to run on. So I could specify run my ad on, sites to do with Bitcoin, say, but exclude coindesk.com, right? And then Google wouldn't serve it on that website. Now that's the same thing. I'm technically blocking revenue from Coindesk because unless my banner ad runs on their pages, then Google will not share any of the advertising revenue with them, right? So that's kind of the same thing. Okay, and that's not illegal, is what I'm getting at. So blocking ads should not be illegal, especially since it's the user end. I mean, blocking ads being illegal, if you flip that over, that would be to say that it's a legal requirement to view ads. You can't have that. That's way off the deep end. Anyway, this next comment on the article says, this is actually a very strong case for Bitcoin. Not sure if it will survive the browser wars, though. I do. I think Brave is going to surprise the hell out of people. I think it's going to be, from the success of Steemit and Search Trade, you don't need much of an incentive. I mean, I don't need much of an incentive to switch from one browser to another, or one social network to another, or one search engine to another, or whatever it is. You don't need much of an incentive. Search Trade doesn't even pay that well, but I'm still using it for every single search. They've got me, right? Got me. And it's only very, very small pieces of Bitcoin that I'm earning from it. Steemit's a bit different because their payouts are quite a lot higher. But even then, this could be a strategy, right? So you just switch to all of these different incentivized systems. You switch to Search Trade for your searches. You switch to Steemit for your social networking. You switch to Brave for your browser. And then all these little trickles of Bitcoin come in for you doing just what you were doing before. And all you've had to do is change the app that you're using, right? And then final comment from this fellow, Blue Rocket, says, it should do if users adopt it as the digital version of Firefox. I guess time will tell. So the digital version of Firefox, what's unique about Firefox is it's open source and non-profit, whereas Brave, I believe, is for profit. So Brave are going to act like an advertising agency. So if I want to advertise something, I could go to Brave's online platform, run an ad, right? And then it would, because one of the features of the Brave browser is that instead of blocking ads, you can replace them with Brave's ads. And the Brave ads, the difference is that those ads are from people who are willing to share some of the ad cost with the user, right? So anyway, I'm not going to go into the Brave browser. If you go to the Brave browser website and then download it or read through their website, they'll tell you all about it. But yeah, I've been watching the Brave browser since it was first announced. It must have been a year ago, and I've been following it ever since. So when I saw this article published this morning, I was like, yes, they're raising some more money. I mean, I'm using the Brave browser now, not right now, but I'm using it on my computer for various things, and it's very slim right now. It's very light, it's very simple, and yeah, it does work. You can try it out. You view one website with a ton of ads on it, and you view another website without ads on it, and it does actually work. Now I'm going to go and I'm going to do a live test here. So I've got this web page up. I'm going to test it with the Brave browser right now, and it's going to. I'm betting. I'm pretty confident it's going to block the ads, right? So I see that I'm using Google Chrome, and then I see the ad, and I've just grabbed the URL, and I'll open up the Brave browser and pop the same web address in, and then let's see, make sure I've got the right settings on here. Settings, shields. So you can have show Brave ads, block ads, or allow ads. So, well, if I put show Brave ads on it, I don't think it will show any because they haven't got any yet. So when I scroll down, there we go. So if you look at the YouTube version of the Cryptoverse, you'll see that ad that I had is now gone. And instead there's a little line icon, which is the Brave browser logo. And it says, coming soon, ads that support a better web. Learn more. And you click it and it'll go through to the Brave website saying about the ad replacement system, which is pretty good, you know. Oh, and there's a little pie chart saying how the ad replacement revenue share is going to work. So out of every dollar, say, that they generate in ad revenue, 55 cents is going to go to the publisher, i.e. the person who actually created the content in the first place. In this case, it would be CoinDesk. And then we've got 15% of it's going to go to ad partners. That would be other networks that have access to publishers, right? So they might partner with Google because Google already has deals with lots of different websites to sort their advertising out for them. 15% goes to Brave Inc. Well, that's quite small. So they're only going to take 15%, which is about average, I guess, for an agency. And then finally, 15% of the ads go to Brave users. So that would be 15 cents in every dollar. That is quite decent, if you ask me. And actually, that's one of the reasons why I think Search Trade isn't paying out very well right now, is because they don't actually have any ad revenue. And neither did Brave. So anyway, it did work. The live demo did actually work, so that's cool. So I'm going to close the Brave browser now and go back to Cryptoversity, because that is it for today's episode of the Cryptoverse with me, Chris Coney. I'd like to thank you for listening today. Would you please go to cryptoversity.com/podcast and subscribe yourself on your favorite platform. Most importantly, please go to Steemit and upvote this episode of the Cryptoverse so that we can generate some funds to continue producing the Cryptoverse. Or if you're super generous, send us some Bitcoin directly via the address that's on that page. Also remember to check out the main site, cryptoversity.com, which is the online school where you set the price to learn about Bitcoin, cryptocurrencies, and blockchains. That's all for today, guys. So it's me, Chris Coney, saying bye for now.